Hey everybody, it's Hanny Mahmood, CPA, owner of Accountable Consulting. Hope everyone's doing well. In this presentation, I will discuss the option of becoming an S Corp for tax purposes for anyone that's self-employed and how it could save you a lot of money and reduce your tax liability very quickly. Again, I encourage all my current and future self-employed clients to watch this video if you aren't already an S Corp, as it will save you money in the long run. So sit back and enjoy, and I hope you learned something new. All right, before I explain the benefits of becoming an S Corp, you first need to understand the three taxes that you will be assessed on. They are as follows: federal tax, self-employment tax, and state taxes in whichever state you reside in or your business operates out of. So, self-employment tax consists of Social Security and Medicare. Although you see no benefit from paying this tax currently, this tax funds your Social Security benefits when you retire at the age of 62 and will fund your Medicare benefits at the age of 65, which will cover all your health expenses at that time. All right, so on this slide, we're going to elaborate on self-employment income and taxes. Self-employment net income is your total self-employment income less your tax deductions that you take for your business. The net income is what you pay federal, state, and self-employment taxes on. The Social Security part of self-employment tax is 12.4% of your total self-employment net income. Good thing is that Social Security does cap out, but at $118,500 currently. The Medicare portion of self-employment tax is 2.9% of your total self-employment net income. Medicare unfortunately does not cap out at all, and if you make more than 200,000, you will be required to pay a higher rate than the 2.9%. You can follow the example on the slide to see how self-employment tax is actually calculated and how quickly your tax liability could increase. And again, this is only the self-employment part of the three taxes you have to pay. You still have to deal with federal and state taxes as well. You could deduct 50% of the self-employment tax on your personal tax return if you file Schedule C, which is a small business schedule, but still the self-employment tax can do some damage quickly. No worries, I have you covered. Welcome to the world of S Corps. All right, for that magic in your life that you've been waiting on and another way to save you some money, welcome to the world of S Corps. As you saw on the previous slide, self-employment tax can add up quickly if you're just filing a Schedule C, which again is a small business schedule on your personal tax return. But if you make an election to have your LLC be treated as an S Corp for tax purposes only, you could save drastically on the self-employment tax, as you will only have to pay the self-employment tax on the salary you draw, not the remaining profits of the company. You'll be able to view the inner workings of this tax savings from the S Corp on the next slide. Another benefit of the S Corp is that you will still be an LLC for legal purposes, but just an S Corp for tax purposes only. This is a positive, as S Corps tend to have more paperwork involved, such as minutes of monthly meetings, documentation of company votes on certain issues, etc. If you aren't an LLC currently, I can help set one up for you, which I'll discuss later in this presentation. On to the next slide to illustrate a real life example. All right, on this slide, you will see the difference of filing your self-employment income on a Schedule C, which is a small business schedule on your personal tax return, versus filing your self-employment income as an S Corp. The Schedule C example is pretty straightforward, so I will not go into much detail about it. Regarding the S Corp, I'll explain the example so everything is clear to you. First and foremost, you will file a separate tax return when you are an S Corp from your personal tax return. The form you file for the S Corp is called 1120S. All right, so your business had net income of $150,000 after all deductions. You paid yourself a $60,000 salary in which you had to pay Social Security and Medicare on. The remaining $90,000 is free and clear of self-employment tax. The total savings is booyah. As you see, the savings are astonishing. Based off the scenario, you just saved a total of $9,864. Yes, you owe me some dinner or a number two combo at Chick-fil-A with pepper jack cheese, a sweet tea, and two Chick-fil-A sauces. I like my fries fresh. It's a pleasure serving you as well. All right, there are some items that you need to handle prior to making this S Corp election. First, you need to set up your business as an LLC. A common misconception is that an LLC saves you money on your taxes. That is incorrect. If you are self-employed and you are not an S Corp, or whether you're a sole proprietor, which is someone that has a business that is not incorporated, or your business is an LLC, you will still file the same tax schedule on your personal tax return, which is a Schedule C. What an LLC does provide you with is a legal shield against your personal assets if you are in any type of lawsuit that occurred from your business. Example, you have $10 million and you are operating a car wash business without an LLC. If someone gets hurt at your car wash facility, someone could file a lawsuit against you and potentially go after all of your personal assets, which is $10 million in this example. Now, in this example, let's say your car wash was incorporated and the same person that got hurt filed a lawsuit. In theory, the lawsuit could only be filed against the assets of the business only and not your personal assets. So if the business only had $50,000 at this time, that's the only assets that would be at risk during this lawsuit. So it's advisable to set up an LLC for that purpose alone, as it could be viewed as an insurance policy on your personal assets. Now, I have to give a disclaimer right now to mention that I'm not an attorney, nor am I offering legal advice in this slide. If you have any concerns regarding your company structure due to a potential lawsuit, I would advise you to seek legal counsel right now. I would also recommend having an attorney assist you in setting up an LLC if you have multiple partners and will require an operating agreement. If you have a single member LLC, let's talk and I can guide you through it all. Last but not least, once you have incorporated your LLC, you need to set up an EIN number with the IRS. An EIN number stands for Employer Identification Number. With your LLC incorporated and EIN number intact, you now can set up a business account at any bank, which I highly recommend. All right, so now that you see the amount of money you could save with being an S Corp, I want to let you know of some of the administration costs that you will incur. First, remember, you must draw a reasonable salary from your LLC. There isn't an actual definition of how much you have to pay yourself, but it should be reasonable based off your job title and should be in line with the current job market for that position. Since you will now be an employee of your business, you will receive a W-2 for your salary at year end. A benefit of paying yourself this salary is that 50% of the Social Security and Medicare tax on your salary will be deductible on your S Corp return. Another benefit of being an employee is that now you have pay stubs in case you want to buy a home or get a loan, which financing companies often need to qualify you. Running payroll will cost you around $75 to $100 a month. If it's just you and you run payroll bi-weekly, I can sign you up for a full service payroll for around $75. Let me know if you need help with this and I'll help you out. If the payroll cost is too much for you and you still want to be an S Corp, I can manually file the appropriate year-end forms for you and the fee will be around $300. First time setup cost will be an additional fee as well. Last but not least, as discussed on the previous slide, if you elect to become an S Corp, you will file an 1120S along with your personal return. To paint the picture, the net income from your S Corp will flow through to your personal return on a form called a K-1. It could be viewed as a W-2 for an S Corp. But the S Corp preparation fees will start out at $500 and increase depending on the complexity of the return. The due date for the tax return is March 15th for an S Corp, unless you file an extension. All right, the last slide for S Corp, short and sweet. If you want to become an S Corp, you need to make the election by March 15th. If you are confused on how the election date will work, please visit the examples on the slide. If you missed the deadline for the year you want it to be effective by, please let me know as you could fall under some type of hardship. All right, although we come to the end of the road. Thank you again for watching. I hope this video was informative and potentially saved you a lot of money by helping you reduce some of the self-employment tax that you previously were paying. My contact information is below if you have any further questions. If you know of anyone looking for a CPA, please share this video with them, and thank you again and all the best.